Good evening, traders. It's Byoa from London. Today is Monday, the 11th of July, 2011, and the currency pair we're looking at today is the Euro Aussie pair on the daily chart. And my bias is to the upside. I'm using the an harmonic pattern called the bullish butterfly pattern to identify a strong support zone, which price should bounce up from the zone. So literally, I'm using this pattern to identify an entry level for my long bias. Right. The pattern is the butterfly pattern is a 5-point structure. You've got X, A, B, C, D, and D should ideally end on a support zone defined by different fib levels of the different price leg within the structure. So, for example, you've got the upper boundary of this level, which is 127% of the XA leg. You've got the second price level, which is this one, which is literally 127% of the AB leg. Excuse me, 127% of the AB leg projected from the C point. Then the last level, the lower boundary of this support zone is 20% of the BC leg. Obviously, these are not just random numbers; is literally different fib levels that complement each other in terms of the butterfly pattern. So, for example, you've got this point B is 78.6 retracement of the XA leg. I don't want to go into too much details of this pattern, but this is how you identify the last point of the price structure, which price is now actually near right now. So the idea is to go long within this support zone. Obviously, price could consolidate for a while before going to the upside, or this zone could just be tested and price rally immediately. Obviously, I don't know that, but I'll put a entry order at 13095. As you can see, even though this zone here, this support zone, you've got two price levels literally on top of each other. If I just get more information, you've got two price levels, that's 1.3095 and 1.3097. Then you've got the last level as 1.3071. So that's literally less than 20 pip range. We're very tight for the support zone, and the fact that you've got two price levels literally on top of each other gives me makes me more confident in this trade, which means price should react strongly to these levels, to this zone, and so this zone should have support, and price should eventually move upwards, and that's the price movement that I'm willing to catch this week. Right. So that being said, I'll be placing my entry order at 1.3095, which is the upper boundary of the resistance zone. Now I'll put my stop loss. Looking at this chart, the ideal place to put the stop loss would be below this recent low here, which is 12930. So I'll probably put my stop loss around 12900 or 12910. But that's just to give more breathing space for the price action, because once price close below this strong support zone, if I have a daily close or two daily candle closes, two daily candles close beyond this level, then I want to close out this trade. That means this pattern has been invalidated. But just to give more room for spikes and erratic price action, I'll be placing my stop loss at 1.2900, 1.2910, and in terms of profit targets, once the point here has been confirmed, I want to manage my trade my stop using a Fibonacci retracement of from the point A to D price swing. So basically draw a fib level of point A to point D and use like 38.2, 50%, 61.8, and 78.6 to manage to trade my stop. But looking at this chart right now without the level, obviously once I go long, when price reaches the next resistance zone, which now turns to support, I want to trade my stop, and the next level will be this point here. But that's just basically using support and resistance zone. So sorry, previous support and resistance level to trade my stop, but ideally I'll be reaching the Fibonacci retracement. So yeah, that's my bias for this week. So just to summarize, my entry order at 1.3095 or 1.3100, stop loss below the recent low, the previous low, so around 1.2910. But ideally I'll be looking to close out this trade if price managed to close below this level. If I have two candles closing below this level, then obviously this level has been breached and this pattern has been invalidated. So I'll close out the trade and I'll just manage my trade using the fib level of retracement of the price swing from A to D. And one more thing just to add, this is just in an ideal world, once this level has been breached, what I should be doing is actually going short, because this is a very strong technical level according to the butterfly pattern, and if the level is breached successfully, then there's much that means price, there's more decline to come if this level is breached. So if this level is breached, I would expect this low to be taken out as well, and price should move much further down. So that being said, my bias to the long, I'm placing an entry level to the upside, but if price manages to close below this level, I want to find reasons to go short and just ride on the trend. So that's it. So it's a entry order at 1.3095. That's a long order. Stop at 1.2900 or 1.2910, and open objective, but use the Fibonacci retracement of the AD leg to throw the stop and manage the trade. Alright, thank you very much, and good luck trading.